Welcome to Charts and Coffee, gang. Hope everyone's doing great. Should be good to go. All right. Great to see everyone. Awesome. All right. Happy Thursday, everybody. Hope everyone's doing well. We've had a FOMC packed week. If you take a look at the economic calendar, it's been exhausting to say the least. But I'll tell you, it's been overall pretty darn good day trading as compared to last week with the follow through that we've been seeing. I think that the most difficult day this week is when we woke up to the news about NVIDIA, and it sort of shook up the overall direction of what we were looking for follow through of geopolitical and high impact stock, high weighted stock news that shook things up. And that's always going to be a challenge whenever we start a morning when there's a single name, a single symbol that's because of its weighting moving the broader averages. So short of that, it's been actually a really good week. And the emphasis on the day trades when I just finished doing the Sector Secrets Mastery recap. So every week I do a recap for the members of, hey, this is what we did. This is how it went. And at the very end of the month, I share with my trades viz all the detail in terms of wins, losses, win rates, dollars, and what the month basically yielded. So heads up, I'll be actually doing that live at the Orlando Summit. So for those of you that are going to the Orlando Summit, looking forward to seeing you actually next Saturday, right? It's right around the corner. And I'll be going into a lot of what I'm doing to track trades and getting into a lot of transparency during that live event. So excited to see you all. All right. So as always, let's go ahead and jump into two things. One, what's the economic calendar looking like this today? And let me jump on over there. So there's two calendars I typically like to use during this time of year. It could be Forex Factory and or tradingeconomics.com and Estimize, because when we go into earnings season, which is where I like to call it the tail wags the dog season, which is where an individual name has the ability due to outsized moves to move the indices, to move the sectors that it's heavily weighted within. And so there is that to contend with. Estimize gives you a nice earnings calendar that you can curate based on symbols that you want to watch. What are the symbols that I want to watch? I want to watch high concentration weighted symbols in the sectors and the indices that move the broader averages: tech, healthcare, communications, consumer discretionary, healthcare. Those are the things we want to focus on. Today, of course, we've got our weekly unemployment claims already in the rearview mirror. A lot of volatility on that, but ultimately it sent indices higher. We have FOMC Jefferson speaking basically right about now. And we have not been lacking for FOMC speak, that is for sure. But the big one, gang, the big one is at noon. Fed Chair Powell will be speaking at noon, so heads up for that. And that really is the only Fed member that matters. The Federal Reserve has lots of members, voting, non-voting, right? If they're non-voting, they're not as important as voting members, right? And if they are the Fed chair, they are really the only ones that are allowed to speak on behalf of truly what Fed monetary policy is likely to map to. Everyone else is just sharing their opinion, right? So be careful with that. But oftentimes we're going to see reaction, but none more so than the head poobah himself. So that's today at noon. And like I said, we have some nice movement to the upside in the wake of, here's your 8:30 candle, initial claims, the weekly unemployment number. So some decent movement to the upside in the wake of that. Has bad news been bullish to the equity markets? Yes, still very much so. And basically here's the meter. If inflation is hotter than expected, equities will sell off. If jobs are lower than expected, if initial claims are higher than expected, again, there's a likelihood that equities will rally. Good news is bad news, right? Or bad news is good news. And so I haven't even looked at the number because it really doesn't matter. It's the reaction that matters. And if the reaction's up, I'm going to just I can don't really even need to look, but I'm going to guess that for the most part, it was rather disappointing. And here we are looking at movement higher on the morning. And more importantly, what is the structure of that 5-minute time frame? What is the context for the movement higher? Is it movement higher in chop? Is it movement higher in a downtrend? Or, like it is this morning, it is movement higher in an uptrend. So far more bullish on the open. I can be a little bit more aggressive with levels that I like to buy at. The Dow is the least bullish, though. Keep in mind, NASDAQ seems to be leading the charge. Russell is neutral. Dow is barely trying to go bullish. That means the NASDAQ is your relative outperformer this morning, and S&P clearly seems to be moving with the NAS. All right, so here we go. First up, yeah, can we take a look at Tesla? Yeah, we'll see. Yeah, D Bolton, it's not my favorite. I can't say it's one of the leaders, but yeah, we'll see if we can't get a daily price movement range potential. Hey, maybe a 1-hour swing set up on Tesla. It's another thing that we're looking a lot more for. Day trading has been very, very good, but we'd like to add some more short-term swings. 1-hour time frames are the path into that. All right. So moving on then to, let's see, can we take a look at the YM? Dow futures? Sure. So taking a look here at the YM, the Dow futures, this is the laggiest. Couple of things to note, and this is probably the most important thing about the Dow futures at the moment is we're doing battle with the previous session close, right? So the previous session close on the Dow was at 33,823. So as long as we are sitting below 33,823, there's a little bit of a bearishness to that. If we can buoy above that, a little bit of bullishness. But again, Dow is the laggiest of the major indices. And if it can get above the previous session close, which it's doing right now, if it can turn into a green trend, which it's trying, it's wobbling a little bit, right? If we can get that, that would be a lot more bullish for the Dow, but not more bullish than what we're seeing on the NASDAQ right now. All right, Tony asks, when a day trade goes against me, how do I know when to get out? Well, if it's what I typically do, which is day trading options, Tony, it's when a certain percentage of premium value is lost. If it's futures trading, it's a point of validity on the chart. So it's always a matter of knowing where the validity of the trade is. Again, for options trading, I like using a percentage of premium paid. All right, next up, is there any hope for the Japanese yen to gain strength in the future? I try not to think about, well, I'll be frank, I don't think that way, Kim. I know that it's going to come from everyone's perspective of what they're looking for, but if I have a downtrend, I'm not hoping for gaining strength, right? So again, it's not a matter of will it or won't it. The truth of the matter is someday, nobody knows. Let's be frank. Nobody knows when that'll happen. But what has to happen, right, for that to happen? Well, we need a weaker US dollar, right? The Bank of Japan, Japanese monetary policy is not going to significantly change. They are trapped in modern monetary theory. They are trapped in low rates forever. It's a great book on macroeconomics around this whole concept of what's happened to the Bank of Japan buying the government bonds, the JGBs, and where they are from this macroeconomic cycle that they frankly can't really change policy out of. They can't. However, the yen usually moves because of what's happening with the US dollar. If the US dollar weakens, the yen might be able to gain strength against it. And right now, that's not the case. It's in a downtrend. So this is also indicative of strong dollar, weak yen, but also generally speaking, strong stocks, right? So one day, right? One day it will, but what do I need for that to happen? Likely a weak US dollar. All right, next up, Ryan asks, would it make sense to get good at day trading SPY consistently before moving into other symbols? Ryan, no. I don't believe in that approach. Thank you for the question. It's a great question. We should not have favorite symbols. It's just that simple. Um, Really, what's interesting is that preference for a handful of symbols comes from two things. Either trading a very small account, whereby the cost of the option is paramount into what's affordable and therefore what can be traded. Very, very, very large accounts, usually seven figures and up, right? High six figure, seven figure accounts also have limited choices on symbols. And that's why you'll see a lot of very large accounts trade a very small number of symbols because they need a very large amount of open interest. So the same thing that would plague a small account, a small choice of symbols to choose from based on cost, is going to plague a large account from a different perspective, but limit all the same. And that's based on open interest. So absolutely, positively not, Ryan. No, because what that means is I'm forcing the SPY to be my only source of opportunity and only source of income. And I would never do that. Oh gosh, no. If I'm looking at the S&P, I'm actually looking at XLK, XLF, and XLV. I'm also relatedly looking at whether or not the S&P is moving with more of its tech weighting and like the NASDAQ, or if it's moving a little bit more with its financials and healthcare weighting like the Dow, right? So that opens up five symbols right there: S&P, NASDAQ, Dow. Well, actually six: XLK, XLF, XLV. And so, no, I'm not a fan at all of a single symbol approach. But what I am a fan of is that connected approach. So if you want to start with the SPY, my friend, cool, no problem. But make sure you're looking at all the connected sectors and indices, and even get down to the stock level, right? What are the top weighted stocks in the S&P, right? So here's another way to look at it. I'm going to show you right now on another screen that I use in the mastery. Okay, here we go. Take a peek here. This is another way of looking at the S&P. Crack it open, take a look at not just the sectors within it, but the individual stocks within it as well. So there's another perspective of the S&P. Thanks for your question, Ryan. I appreciate it. All right, next up, Ren asks, this is how I learned about you. I searched on successful women day traders, and I kept coming up. Oh, really? Oh, very cool. I read a few articles and watched a few videos and said, she's the one I want to learn from. Ren, thank you very much. I know, I appreciate that. I had no idea. So if you Google successful women day traders, neat. All right. Thank you, Ren. I appreciate that. And thank you for your time, and thank you for being here. That's very cool. I appreciate that. All right. Next up. How you doing, my friend? JP in Chicago. I know we watched the reaction, not the number, but the unemployment came in less than forecast, and we are up in the market. Oh, really? Okay. So unemployment was, and again, another reason why I don't, JP, thank you for that. Yet another reason why I don't look at the number. I can guess at what it was, but notice I didn't know, but thank you for letting me know. I think the reaction, it just goes to show the reaction is the only thing that matters, because sort of the logic of good is bad, bad is good. Who knows, right? Your point is so well taken and on point, perfectly on point, in that the reaction is all that matters. So normally, if it's a lower number, yeah, I would expect weakness. I normally would, but again, JP, you're in the sector secrets master. You know how we roll. We don't really care what the number is. We care what time, right, that hot zone is going to be. And what is a hot zone, gang? A hot zone is a high volatility, high impact schedule event. There are all sorts of hot zones: FOMC speaking events, earnings, data. This, of course, unemployment claims would be the data variety. Hot zones are most relevant to data that would reflect what's happening with monetary policy, FOMC members, and inflation, PCE, CPI, ISM numbers, and JOLTS, unemployment claims, non-farm payroll, jobs data. So there you go, JP. All the more reason just to look at the time that it's going to be released, and the reaction, right? What's happening in bonds, what's happening in currencies, indices, etc. So great stuff. Thanks, JP. What process do I use to locate high probability trades? I use relative performance. Maurice, I use relative performance. What are so for example, yesterday there were some really great setups. There was one really great setup in the Nasdaq and the S&P, but the relative performance was in KRE and RTY. That's where I put my capital to work. So relative performance and preferably trending intraday timeframes for day trading, and trending 1 hour or daily timeframes for swing trading. All right, next up, Murph asks, what is considered a good size for open interest before entering a trade? So Murph, the more the better, right? I mean, the higher the better. However, we all need a floor, right? I don't love 500 open interest, but that's my floor. I prefer 1,000 or greater. But if I have 500, it's doable. Then we got to look at the spread. You know, oftentimes low open interest can create very wide spreads. So I would focus mainly on the spread if it has at least 500. And then after that, I'm going to focus on, making sure the liquidity is there. So 500 to 1,000, the more the merrier, right? The more the better. Absolutely. All right. Got a question coming in from our essentials room, or comment, I should say. Hey there, Tom. Very nice trade on KRE. You know, it was cool, Tom. I haven't been in the options room in a very long time. I'm not on the regular rotation there. So when I do get to jump in and talk to the folks there, it's cool to be able to A, find some trades, and B, find a couple that worked out really well with the ability to set up the alert. Let me show you all real quick. Let me see if I can do this here. All right. So yesterday in the room, so this is how we set this up. And I love that this worked out this way. So, we're talking about where the relative strength is. We're talking about what we'd like to get into. This is Tuesday's notes. I need Wednesday's notes. There we go. So I need what I can get into, right? And what's the weakest? Right before the bell gang, we already knew Russell was really weak. And that's already where a lot of my focus was. We talked about waiting, and then right off the bat, boom, can we get into a 941? Now again, this is before the trade triggers at 941. I already want to set up the IWM. That's the ETF alternative to the Russell. By doing that, everyone has a chance to see what the trigger is well in advance, and what the strike is, and what the zone is. So we can place alerts, we can get a feel for cost, and then a little bit later, you can see we set up the KRE. And then you can see where we got our fill. 130 for the KRE, $130, 102 for the IWM. Now the question everyone should be asking themselves once we know the fill is, how many of those options could I buy? If an option is going to roughly cost me 100 to 130 bucks, I'm not buying one, although some folks can, and that's fine. But most of my traders were trading 5, 10, 15, 20, 30, 40. I think one of our traders, the scalability of liquid low-cost options is going to be superior to taking one $2,000 option. I'd rather buy $2,000 worth of option than one 20-point option. It gives us so much more ability to scale out and scale in. And in this case, we were able to continue to scale out as the trend went in our favor. So yeah, I appreciate that, Tom. I love that that was something we were able to do in the options room, the way that I love to do it, which is, hey, this is what we have ahead of time. Let's get that idea out there. Let's make sure everyone knows where the trigger is. I love trigger alerts, not fill alerts. Two very different things. Both are helpful, but a trigger alert is far more helpful. What am I going to do if price gets to a certain level? And so ultimately, that's going to be the same thing we look at here as we get in here this morning. What's the plan? The plan is to find those trends on the 5-minute, which ones are above or below previous session close, Pingala. If some of this terminology is not familiar, I would say you can go to one or two places. You can go to my YouTube channel, Raghee Horner, and you can I would check out the pre-market routine for the win and do this on your next day trade. In fact, if you're looking at the value of what is the Pingala, it's a process, not an indicator, gang. Check that out. Do this on your next day trade. And you can also see, I think in that video, I walked through how I look at the previous session close and what that does in terms of sentiment. What direction am I most likely to take the trade in? And just like that, gang, That is a wrap as always. Thank you for joining me for Charts and Coffee. We're here every morning, Monday through Friday, 9 to 9:20. That said, there will be no Charts and Coffee tomorrow. So we'll be on hiatus until Sunday, where we have our top tier outlook live at 6 p.m. Eastern time on right here on the channel, Raghee Horner, or at Simpler Trading. All right, gang. As always, thank you so much for being here. I'll see you all on Sunday. Okay, be good to each other.